And now we are ready for the AVID market update. We love technology so much. Okay, we all know that mortgage rates affect demand, so I keep kind of building onto this slide a little bit and adding on to where the rates are, because we've just seen rates doing a lot of things, and one of those main things they're doing is affecting our market. It's been real stop and go and clunky. Some stuff is flying off the shelf and some stuff isn't, and these rates, people get used to them, but then it also freaks them out to see the size of the payment compared to what we were looking at a while ago. So we're seeing more things coming back on market. More buyers are saying, yes, I'll take it. I gotta wait, never mind, and running like heck the other direction. So more deals falling. Price is the name of the game. So with these items that we're talking about that just aren't moving, perhaps that was the price for a minute and perhaps it's not the price today. We'll have to see, but pricing is key. So if you're selling something and you've got a range, pricing at the top of that range is not what we're advising right now. It's buyers need to feel good about what they're purchasing just because of some of the tentativity that this market and these rates are bringing. So spring is, in Pioneer Title, we've talked about their PTC index before, where they take 9 factors and they put them together to measure the vibrancy of the market. And their index number is showing that the market is not very vibrant, is what that 227 means. So spring is the time of the year when the housing market is warming up, everything's heating up, things are picking up. But with the financial rates continuing to increase, it is making the market, they're calling it unpredictable. And what I'm seeing, boots on the ground, absolutely confirms that. That word, that's the word. It's a little unpredictable. But the average blended sales price of Ada and Canyon has been an increase of nearly 6% from March. So we see all these signs of optimism creeping in. And a lot of the data shows, like their index and like the blended average of Ada and Canyon County prices, that we're up from last month, but we're still down from last year at this time, when things were $599 on average instead of $553. So here's their price index, confidence, vibrancy level, and you can see where we are now. I've drawn a little black box around it. I've drawn a little line, a highlighted line across where we are now. And what I wanted to show you guys was a little pointer, but here's where we are now. And this is where we were also in May of 2017, 2016, 2015, 2014, 2013, and 2012. So this is where we've been a lot of Mays, and it's where we are right now. But it's not where we were a hot minute ago when everything was going really frenetic and crazy. Building permits are a market indicator, and permits are down actually nearly 23% from the month prior and 61% for the year prior. So builders are pumping the brakes.
Doesn't look like it.
It doesn't look like it. You're so right, Tom. It doesn't. And we do have a lot of builds in progress. And the assessors actually talked about that last month, how many units have been added and how many units we're continuing to add. But yeah, overall, we've got some building permits down data. Cody.
If you could go back 3 or 4 slides to the average between Canyon and Ada County sales price. Is that the list price or is that the, I guess it might be sales price?
Yeah, the final sales price.
Yeah.
And the average of the 2 counties together. And that's going to include your new builds and your existing homes. So that's the big pot of everything. And when we start to break things down by newer, brand new versus older, it'll change a little bit, but good question. Thank you. And so where are we on median prices in Ada County? We're still over $500,000 for the median price of homes, $517,500. And this is up from last month, but again, down from last year at almost 13.5%. And last month, that was even more drastic. So last month, year over year, we were down 16%. This month, we're only down 13.5% from last year. And I kind of feel things picking up a little. So, it's warming up, but where's it going? Nobody has a crystal ball. Days on market, though, are up 244% from last year. So just insanely. But they're down from last month. So things are moving a little more quickly than they were last month. And we said the same thing last month. We said they're moving a little more quickly than they were the month before. And of course, in December-ish, nothing was really moving at all. So, but inventory has gone up. Days on market is down a little, but definitely up year over year. And same with prices. And it's very similar story in Canyon County, where our median sales price is around $390,000. And again, it was down from the previous month. Wait, sorry. Oh, up a little bit again from 395 the previous month, 390 the month before that. So it's creeping up, but then definitely down year over year. And days on market, down but up year over year. Number of homes sold, and that's down more this month year over year than it was last month. And inventory is only up 9.7%, but it was up a lot last month when we looked at year over year. So we've got a little bit of a trend there showing things that they're kind of warming up a little bit. But what about duplexes and fourplexes and our multifamily stuff? Now, how many people here in the room have multifamily in their portfolio? 2 units, 4 units. So there's a lot of us who do, yeah. And so these trends are also very important. We've gotten inventory has finally increased. We've been thinking it was going to increase from 9 to 18. So as our office is putting it, the spring thaw is finally here. Pending increased from 4 to 16. And the largest jump was Ada County duplexes, which went up by 5. Sales have remained steady, and absorption levels are above 2 in all categories except for Canyon County duplexes. That's still really low. And so that's still showing there's just not a lot there. The market can absorb it. Now, what we've seen experientially is that we're not pricing our duplexes, triplexes. We're not pricing them as aggressively. Again, where we say price is the name of the game, you really need to be cautious on your duplexes and triplexes, because while the absorption number looks like it's moving, buyers are just tentative. And so this one, for example, the 11th Street property, we're seeing most cap rates, big difference between the market rents where they could be and where they are, and mostly they're in the upper 4% range if we're looking at market rents. We're seeing a lot of those in duplexes and triplexes. Those current rent now cap rates are way, way lower. Now this one's only down to 4.1%, but we're seeing a lot of 2s and maybe low 3s when you're looking at your actual rents. So if you're running your numbers based on today's rents, you're really seeing some fairly low cap rates in there. And here's what we've seen on the 6-month trailing. Now, this is fourplexes. So once we look at fourplexes, they've been a lot more stable. They haven't really taken a hit, but there's been big data skewing things in there. So big data skewing events. And so interpreting those, Tony Drost, who's been running this data for decades, says really 6 months average is 4.82% cap rate based on current rents. So anything 4.5 to 4.75 is probably where your value is, probably what you're going to be able to buy, what you're going to be able to sell at. That's sort of the metric. Since we've had so many skewed months, we've really got to look at that 6-month trailing line. The gross rent multiplier, so the ratio between your rent and your purchase price, that is around 163 in terms of your trailing 6-month average. And so we were lower now. Now, the lower this number is, the more favorable it is for buyers. And right now we're at around 170 is where, if you're trying to do a quick value on your property, you could take your rents times 170. And that would be how you'd calculate your gross rent multiplier price. And this is what's actually there. What is actually on the market in fourplexes with the 2 counties We've got, I think that's like maybe 10 between the two counties. We have maybe 5 in Ada County. And you can see your price ranges. Well, they're going to depend on age. The Beach Street property is an older property, a converted house, and the Lucky Lane property is at 875. Rogan at 950. We've talked about that one. Those were built as 8-plexes, and you've got to pay cash. We don't love those. Ski Jump is going to be brand new, so that's at 1.215 million. Next month, Tony is going to present, and he's going to give us a great analysis of buying new, holding new versus buying older properties and holding older properties. Because sometimes if you're looking at the difference between maybe 875 and 1.2, there's a big gap there. But other times you may be buying a property and not paying that much more for a newer property. And so we're going to delve into that a little bit down the road next month. Oh, and then Lexi Way is still active with 27 days on the market. That's a great community. I was wondering if they were pushing the price a little at 900, and so far it hasn't moved. So we'll see how quick Lucky Lane moves, because I think it's priced a little more compellingly and priced right. And that Overland property probably will move fairly quickly at 869. The square footage,
11,440.
that doesn't seem right. But maybe that's why it's higher price. Maybe they have a bunch of 3 bedrooms in that one. But that seems high. Yeah, that might be a data error. I'll look into that. Yeah, and there were 2 questions coming at once. What was the other question? Same one? Yeah. So for the folks on Zoom, we are guessing that that's a MLS error on the square footage on Lexi Way, but we're going to have to look into it because on Lexi, the 7440 square feet on Lexi Way, because I think those are a little smaller. We'll see. Oops. And then this is what's active in the 5+. So we've got a longer list here than usual. This is probably one of the, I can't think of other times where we've had as many 5+ units available as we've had 4. Idaho usually has more 4-plexes. So look at all these larger options that are available right now. It's just some of those prices are going to be holding people back too. So rates. What is going on with rates? I've started checking in with the lenders. I usually just have my lender and call them and know what's going on. But in this case, since it's so hectic and there's more variances, I'm keeping my finger on the pulse. So here's what Idaho Central's got going on. Suddenly now their 30-year fix is beating their arms. For a while there, their ARM loans where they would have the fixed rate for maybe 5 or 7 or 10 years were really excelling in the rate to the point that people were choosing those, and now they're back to a 30-year fixed rate that's kind of winning the interest rate competition. MacU has a 7% rate for 2 to 4 units, and that's up from where we were a couple months ago. It was 6.25, I think, in early March, and then these 30-year fix. Yeah, in Idaho Central, they're above 7 for their multifamily 2 to 4 units. It's affecting things. It's doing its job. That's what they wanted them to do. There are some other programs out there. Movement has some other programs. And so as we get into these crazy rates or these higher rates that are prohibitive in some ways, if anyone is interested in seller financing, I have more clients talking to me about that sort of that sort of thing. So if you're holding something and you're willing to carry the note on it, you could switch from being the landlord to being the bank, and you're going to get a lot of interest on that concept right now. Okay, well, what's going on with the rents? Who has vacancies or people who are moving out soon? Anyone? Any vacancies? Bodie, Jerry, and has it been taking a little bit more time than we expected? Okay, Shane just posted a vacancy today And he dropped the rent $100 and some. It was last year, it was leased up for, I think, $24.75, and he just posted it for rent at, what was it, whatever, 23, a little under $23.50. So yeah, price is the name of the game, and this is the time to rent it. School's ending, BSU is ending. This is a time where we have a lot of turnovers. And so what First Rate is recommending is come in at the right price. Don't push it too much. Try to get it done fairly quickly, because they're seeing things that, even though it seemed like a reasonable price. So if you have something that you're about to list, Kat from First Rate also reminds that a lot of the websites give you more attention early on when you're a hot new listing, and just trying to knock it out of the park early is the way to go. So there's over 1,280 listings active. So week over week, that rental inventory just keeps rising. And the ones that allow pets, that's a lot of Idahoans have pets. And so you're eliminating a lot of prospects if you're not letting those pets in. And then of course, if there's companion animals, those are not pets. So they'll be in your property anyway. It might be easier just to allow pets. And the new listing theory, this is the graph she sent me of the active listings on Zillow. A lot of them are in the State Street corridor. A lot of purple. But vacancies are still historically low. I mean, maybe higher than they were when it was just, we were like out of houses to sell, out of houses to rent, and that was a really frenetic situation. But this is still a really reasonable vacancy rate that we have going on right now. Oh, and I should probably say the number on that. What is the number on our vacancy rate? Sorry. Yeah, we are below 5. The combined average of single family and multifamily was right around 3%. Single family was lower at 2%. Multifamily went up for a hot minute. Now this data is still Q1 data. And so things are shifting a little bit beneath our feet right now. This is the NARPM data, and they only calculate it quarterly. This also has your rental averages, and these are from first quarter. But what I'm seeing is, if you really did a strong rental analysis last spring, you're probably a little below it this year. And it's probably ideal to go with that. If you've done your rental analysis at a different time, you might be kind of right on par, just depending on when you did it. Oh yeah, and so conservative renewal increases. You don't want to accidentally bump up someone's rent when they can find a better deal elsewhere and induce them to move out. You don't want to deal with the vacancy. You don't want to deal with the turnover costs. So we're recommending being a little more conservative than maybe you would have planned on with your renewal offerings. So price is the name of the game. And this applies to your listing price, or whether it's a rental price. Not pushing it too much, but trying to get the job done quickly. If it gets done quickly, don't think of yourself as leaving money on the table. Think of yourself as getting the job done, because otherwise it could sit. And if you wait too long to list it, you might miss the timing. If you let it list it and it gets old, you might miss the timing, because people are moving right now. They're buying right now. Things are happening right now. So it's a good time to already be near market rent or at market rent, so you don't have to slap a hard increase down, because that might induce a move out, because people might find some other options out there that are cheaper. And condition always matters on rentals and on listings. But for a while there, it felt like anything was going. And at this point in time, condition matters more than ever. Amazing the difference in a paint job or some landscape, your curb appeals. So, and it's always easier when you keep it up as you go. So don't let that deferred maintenance add up, because then it just gets harder and harder to get her done. So that's really kind of where we're at right now. Is that what you guys are kind of feeling with your properties as well, on par? All right,